morning, traders. Welcome to the Dosh Trader Morning Call video for Thursday, November the 12th. I have a lot to cover. I want to get right to it. As of right now, guys, I'm looking for a big move to come in the markets, and I believe that move will be lower first before we move higher. And I'm going to show you in the charts why, and I'm going to also explain market divergence that we've been having for several weeks now. Okay, first of all, our transports is our main leader. That is not leading. That index has not led. The Russell 2000, great gauge of risk, right? Risk on, risk off. Traders and investors feel good about the market. They buy more risk because they want to make more money. That has not happened. Our secondary leader lower. NASDAQ. Now, a lot of people say, well, Mark, the NASDAQ has been up. It's been up great. It's been doing fantastic for November, all of November. And as a matter of fact, pretty much all of 2015 and 14. And I say, you're correct. However, there's several leaders in the NASDAQ which are leading the index. And what I mean by that is the Amazons, the Google L, Pricelines, Facebook, Microsoft. Those are the top 10 holdings. And I'm going to show that to you because I do not want you to get fooled by what the pundits are showing you and telling you. If they stop, and they're starting to contract right now, you're going to see a market move lower, and the NASDAQ really going to move lower because it also is heavily weighted on what? Biotechs. Now, biotechs haven't done so well. And also Gilead is on top of the list too. And you're going to see it's almost 50% weighted on the NASDAQ 100. And that is a skewed index, okay? So that's why I want to explain to you and show you that don't get caught up in while the NASDAQ is rallying, let's buy the NASDAQ. Because if you're buying the NASDAQ or the Qs, or if you're buying tech, you're probably not making money if you're not buying the top 10 holdings. And I'm going to show that to you, and you'll see easily why I am suspect of this rally, okay? Let's go right into the charts. We have the spiders, as you can see here, big bearish rising wedge. Could this be a bull flag? It sure could, but let me show you why I believe it's going to be more of a bearish pattern than not, okay? Here's a 60-minute chart of the spiders on this Dosh Trader Pro that I love to use. I want to show you this big bearish rising wedge. What do we have here? We have a bear flag, okay? So the 60-minute is showing us a bearish pattern, two bearish patterns breaking down, and this bear flag is now breaking lower. Okay, so I believe that the bearish pattern will prevail over that bull flag, possibly that bull flag on that daily chart. Okay, so not a good sign here that we're starting to break below this bear flag. So sometimes it's always good to go from the daily to 60, even to 30 if you had to just get some get some confirmation on your patterns. All right, so 60-minute chart here, not looking too great. All right, let's take a look at the diamonds. Now, diamonds is our lagger. It's one of the laggers as well as the spiders, believe it or not. Okay, you have your transports that are a main leader. Secondary leader would be the Russell, and of course the third would be the technology sector, NASDAQ 100, QQQ, if you will. Then of course spiders, and then diamonds. And you can see this has been leading. Our lagging index has been leading. Not a good sign. That's, again, another reason why I'm suspect of this rally. Also, we do have a bull flag pattern here, which is okay, but we have more bearish patterns than we have bullish patterns, and this is not telling me something that I like to see if you are a bull, right? Take a look at the transports. Ugly-looking chart, not even close to being at the highs, and the transports is our leader, and we are contracting. You can see that we're starting to really tighten in our range, and we have inside days here for many, many weeks. So this is something that we want to pay attention to very carefully, okay? Our transports is not signaling everything is okay, let's move to new highs, okay? That is a big problem, okay? Now we have the Russell 2000. What does this look like? Very similar, below the 200-day moving average. Again, not even close. It's a 50% retracement from the high to this low, and that's where we are, and we're stuck in. Now, if we start to break down, I believe the transports, and I do believe the Russell, and again, eventually the NASDAQ, which I will show you in a moment why this market is a better chance of headed lower before moving higher, okay? Take a look at the Qs. Now, this is where I say, wow, the Qs, look at what a great, if you look at the Dosh Trader chart here, look, you can see, wow, this is fantastic. Look at this big gap up. We're moving higher, and this was on the Google earnings. Fantastic. Well, no, not necessarily. Although, yes, it does look like, oh, wow, this is a great bullish chart. Yes, but what's underneath the hood, if you will, and I'm going to show you. Our NASDAQ is only being run up because of these stocks. Apple, Microsoft, Amazon, Google, Facebook, Google L, and then you have the Gileads, and of course the Intels and Cisco's. Makes up 49.46% of the Nasdaq 100. So if they start to move lower, guess what? Nasdaq will move lower, and move lower in a big way, guys. Okay, this is important, very important here. Nasdaq will move lower in a big way. So just keep that in mind when you are looking at this index and you want to trade it. Okay, if you're trading the index itself, the QQQ, it's one thing. But if you're looking at stocks, tech stocks, you think that Nasdaq tech stocks are moving, you have to use caution. Here's another thing that I want you to see is the semiconductor index. This is the SOX. This hasn't gone anywhere. So technology to me really is in trouble, aside from the several stocks that I've mentioned: Apple, Microsoft, Amazon, Google, Facebook, and Gilead. These are the stocks that are moving the index. The semiconductors also in trouble. If you look at the 650 line and it starts to break that 650, watch out, guys. I do think that the markets will move lower. Now, seasonality trends, we are coming into, again, a couple of weeks of some weakness. I always like to see we have monthly options expiration next Friday. Markets do tend to put in a low prior to that Friday, and then we kind of chop around. So between the end of this week, probably tomorrow, we put a low in, and then we chop around next week, which is really going to be, I would discount next week's price action and wait till that following Monday and see where we really go if the Santa Claus rallies for real. Don't anticipate by buying stocks right now. Let's get a handle on where the market is moving, and then let's buy with conviction, okay? And if that's the case, we look to sell the market too as well. Have a great day, guys. I hope it helps, and we'll speak to you then. Take care.